My name is Atyab Tahir. I'm currently the CEO and co-founder of Hugo Bank in Pakistan. It is one of the five digital bank aspirants that's looking to get a license from the central bank and hopefully start digital financial services as a means to providing banking services to the people of Pakistan. So, look, um, first of all, one has to appreciate that digital payments are just starting to gain momentum in the country. And COVID played a part in that. We saw an uptick of digital payments at that time. Merchant adoption is a little slow because while we have a lot of merchants in the country and while we are boasting about increase in POSs in Pakistan over the last couple of years, the POS to customer ratio and the POS to merchant ratio is still very low. When you have nearly 2 million merchants, about 800,000 of them are documented and being serviced by distributors and multinational companies, 96,000 POSs or 100,000 POSs isn't really a favorable number. I would like to see this number get to about 500,000 over the next few years. And that should be a combination of typical conventional POSs that are on people's phones, which in the payment industry we call a soft POS, and QR outlets. Uh, we have seen QR outlets come and go. The first instance of QR outlet was in 2014 in Pakistan when a fintech introduced QRs, which was a proprietary QR. We have seen telco-owned branchless banking services get into this space. We have seen schemes get into the space like MasterCard, but we have not seen an uptick in people using QRs. Uh, as internet usage increases and as connectivity increases in rural parts of the country, our expectation is that the user experience with QR would also get better. Uh, the introduction of one QR by the central bank or a standardized QR would effectively ensure that we don't have a series of proprietary QRs in the market. We also should look at a multi-rail payments play when it comes to merchants. I expect Rast to play a very important part in that. P2M on Rast, which is person to merchant, is just being enabled. And I'm hopeful that once that happens, we would start to see people using real-time payments gateway, which is known as Rast in Pakistan, to pay merchants for things that they buy. Uh, if you look at countries like Egypt, if you look at countries where real-time payments have been introduced, the adoption ensures digitization of cash in that market. And just to put things in perspective, for every $3.9 billion that we digitize in Pakistan, it helps us formalize 1% of the GDP. That number, if we sort of keep that as a guiding light for us, we should expect to digitize at the current rate. We should expect to digitize Pakistan's economy over the next 50 years. So we need to accelerate that number so that we are seeing formalization of that GDP and reporting of the actual wealth that exists in Pakistan and the actual size of the economy. I think it's an unfair comparison. And the reason it's an unfair comparison is because they put in place certain mechanisms that we are still evaluating. For example, demonetization. In India, while it was a pain for hundreds of millions of users of cash, it accelerated uh, adoption of digital payments. Here in Pakistan, this would be a political suicide for many people. So I don't expect an elected government to make this choice. Perhaps the incoming interim government um, may be in a better position to make this choice. However, demonetization is not easy. It comes with its own complexities, and those complexities would need to be understood before that decision is made. Uh, for what it's worth, the central bank continues to keep doing its part, continues to keep introducing regulation that would ensure digitization of the economy. Um, and we have to sort of, I don't think we should look at it as a comparison, but we should look at it as a progression in Pakistan. When I came to Pakistan in 2012, only 13% of the people had access to formal financial services. It was through the introduction of the branchless banking license. It was through the introduction of the EMI license, the PSO, PSP license, and now most recently the digital bank license, that you see an intent for that the central bank has to digitize the economy. A key aspect of this is payment pools that exist in cash. Those are the payment pools that we need to focus on, the largest being government payment pools. Most of those payments are being made either in check or money order even today, right? While we have a system like RTGS and Prism and Rast that enables digitization of those payments, the government itself is very slow to adopt uh, those payments to their needs. Well, there's always opportunity to improve. Right. And in Pakistan, when we talk about digital payments specific to merchants, the starting point and the terminal point of that conversation is what we call MDR, and it stands for Merchant Discount Rate. Uh, while banks are eager to charge an MDR, and they're eager to sort of have a price war on who charges lower MDR, that's not where the conversation should be focused. The conversation should be focused on facilitation of business enhancement and business growth through digital payments. We have yet to communicate that effectively to the merchants. Most merchants in Pakistan are still offline merchants, and because of the small size of the business itself, where it's a mom and pop shop or a person that has maybe one or two stores that their family members run, they really don't feel the need to digitize the business itself. Starting with inventory management. Inventory management is done manually, or payments are done manually through a register. Even credit is managed manually. Digitizing a business is just not about digitizing the payments. It's actually about digitizing how that business is conducted. And if we continue to have this conversation in isolation, where uh, they don't want to pay the 2.5%, and the banks want to charge that 2.5%, that conversation will end very quickly. It's about bringing in the tools that would help merchants do business more effectively. A typical merchant makes between 7 to 10 calls a day to place their orders to various distributors. Then they wait for that distributor to show up to fulfill that order while they're turning away customers because they have run out of inventory. If you were to automate that and embed payments in there, you would find that there would be more efficacy in servicing the customer, and there would be more efficacy for the business to grow itself organically. We have not focused on that. While there are players in the market that are doing it, we have examples of various startups that are trying to do it. There isn't enough impetus from financial services providers to embed their services into these solutions. And once we see that marriage happen, we would find that their goals would be aligned to digitize the merchant. Well, understand what the problem is, right? Understand the pain that the merchant goes through. And for each of us, that we're only trying to solve a part of that pain. Somebody has to come together and articulate that pain from beginning to end. And we have to understand that there's a part that we play. This is not a winner take all game. It's not for a big bank to start an app specifically for merchants and cut out the smaller players who've been doing it for a while. It's not about an upcoming digital bank to do all of it themselves. It's actually about figuring out who to partner with and why you're partnering with them. That why seems to be missing from the conversation. Government has a part to play. I think they have done some things to promote collaboration, like SCCP sandboxes and SBT sandboxes. We need to see more of that through this National Incubation Center effort, or through other similar efforts. We need to see this collaboration happening at the time of inception of these startups, and to be able to inculcate a culture of collaboration, not just not just when they grow to a certain size, but from the very beginning. That sense of creating a collaborative environment goes down the very fundamentals of teaching this to kids at a young age, where rather than having them focus on individual exams, you focus on team projects in schools. It's just not done overnight. I remember when I was in business school, uh, one of the first projects that I was put on was a team project. Whereas in other business schools, individual performance was being focused on. So the fundamentals have to be taught at a very, very basic level about collaboration. And then going back to the initial point, understand the pain that you're trying to solve. If you focus on that pain and not just a part of the pain that you're trying to solve, but the entire end-to-end possible solution, then you'll find that nobody can do it alone. You have to do it through collaboration. Because it's easier to go and sell to somebody who's already documented, right? It's easier to do a KYC for them. It's easier to understand where their business is. Compare that typical merchant that has a billboard and has a physical presence to an online merchant who's probably working out of a small apartment or a basement somewhere. It's very hard for conventional institutions to understand that business can be done unconventionally. And they gauge everyone with this lens of conventionalism. And that's why it's very hard for them to accept that while a small business that is up and coming would not have enough conventional data, by looking at the technology that they're using today, which is the smartphone, you could look at unconventional data to understand the SME. So there is an absence of data when it comes to SMEs and new players in the market. Banks tend not to take that risk to understand data differently. Fintechs have started doing that. So if you look at the Dastagirs of the world or the bazaar retailers that are operating in Pakistan, they're very data driven, and they're using that data to service those merchants better. What the layer that they're missing is the embedded financial services layer. So going back to the initial point, figure out what the points of collaboration are. It's not an unregulated fintech's job to take an underwriting risk. And it's not necessarily the job of the bank to set up a division to start to understand merchant data from the ground up. The initial collaboration could be the fintech or the startup provides us the data, and the bank uh, builds a model to underwrite the risk. That I have not seen happen. The other thing that I think banks are just starting to realize, and to give credit to them, they have come a long way in the last few years. It's just that they're too big to change quickly, right? And we will see these players who have unlimited access to funds uh, utilize those funds as long as the will to change is there, and that will is just starting to emerge. So for me, the incumbency is what gets in the way, right? For new players like the venture that I'm involved with, we are not unencumbered by that baggage. We just have to look at the problem first principles, and we have to build a solution that ensures that we are fostering that collaboration that banks have failed to do so far. Having said that, there are some players in the market that are now focused on collaboration and are building their entire fintech play uh, on collaboration rather than trying to build or acquire something new. So I think what I'm about to say is quite obvious, right? It's that you take all sorts of bias, negative or positive, out of your desire to serve women entrepreneurs. Data is the great equalizer. The use of smart technology, including smartphones, is the great equalizer. What we need to do is understand what the entrepreneur is trying to do, whether they're man, woman, or any other gender. What is the entrepreneur trying to do, and how does that particular solution solve a particular problem in the larger scheme of the economy in Pakistan's context, and then create programs at a micro level, which is the fintech or a last mile level, or at macro level, which is the government, to ensure that those solutions get to the problems that they're trying to solve. Now, when you start to take bias out of that decision making, you automatically start to rely on data that is true for both men, women, and other genders as well. It's just that we need a little bit of push. The reason the central bank pushes for banking for women or loans for women is because that has not been done yet. Unfortunately, the industry has taken that as that guidance as just a tick box exercise, and you see fancy billboards with great messages, but the attitude does not change. So while you take bias out of your decision making, you also have to take bias out of your attitude. It is a difficult segment to get into. It is a difficult segment to nurture because data does not exist historically. And we also have a societal bias. But what we need to do is start to take chances in pockets, right? And when we talk about, it's my bias as well. When I think about a retail entrepreneur, I automatically think of a man. So when I'm designing a product, I'm designing a product about this persona that I have created in my head without doing the research. Whereas when you go into interior Sindh and you go into Punjab and you go into certain parts of Gilgit Baltistan, you would find women retailers, right? That, because I see that bias, because of my limited exposure, that bias translates into the product that I'm trying to create. That's why market research is important. Trying to understand how many women entrepreneurs actually exist in the country as a percentage is very important. I don't think we have that number. We've done research in some pockets, but we haven't come to a conclusion yet. Can I share a personal anecdote with you? So when I came to Pakistan in 2012, I came to work for a microfinance bank, right? And I was supposed to look at strategy. And one of the first things that my boss at that time told me was that you can't build strategy for a microfinance bank by staying in Karachi. There are parts of Karachi that you need to visit, but there are parts of Pakistan that you absolutely need to visit that don't uh, come into our thought process when we are thinking about what our business is going to look like. And he sent me out on a 90-day road trip. I was on the back of motorbikes. I was in rickshaws. I was on the bicycle stand of a bicycle going with an RO to a rural area, just to understand what the rural customer needs, right? Just to understand how to service the rural customer better. In today's day and age, we only have 21% of Pakistanis who have access to digital financial services. And most of these Pakistanis are urban Pakistanis. If you were to go and look at a typical bank and ask them where their branches are, they would tell you Karachi, Lahore, Pakistan, Peshawar, Islamabad, Peshawar, Multan, Sialkot, Gujranwala, and 13 other slightly smaller cities. Beyond those cities, last mile branches are few and far between. What's worse is that last mile connectivity is abysmal. We have created excellent 4G services in some parts of affluent Pakistan. We have created less than mediocre 4G services in most of Pakistan, which is urban, and in most of rural Pakistan, we are still dealing with 3G. Right, so even 4G hasn't been properly rolled out in rural Pakistan. When you expect to digitize the economy, a large portion of which is rural, and you choose not to give them the right tools, then you will continue to build products where you see your current services existing. Right? So again, it's not about creating financial services or any kind of services in isolation. It's about also understanding that, do the rails exist? Those rails, unfortunately, are in the hands of an archaic industry, which is the telco industry. And the telco industry is in no ways or no means digital. It's just a dumb pipe. And that dumb pipe has not gotten to where it needs to for us to have this flow of data and flow of digital services through it. Uh, I think telcos are trying. They're trying to become digital companies, but they continue to fail because their thinking is still stuck in towers and batteries um, and SIM cards. They're not really thinking about what that SIM card or that tower or those batteries that exist, uh, you know, attached to the tower, propagating. They're propagating data. They're propagating access to digital services. The telcos who realize it will continue to benefit, and you will not see this desire to exit Pakistan from the telco industry. You actually would see a desire uh, to embed yourself with players who are providing digital services. We have something very interesting, which most countries don't, and that is a national citizenship database. There's some discrepancies. 20% of Pakistanis still do not have, or adult Pakistanis still do not have a CNIC. That number could be higher. We don't know. Um, we have a growing adult population, which is growing by about 4% for the next few years. So we'll see this 130 million adult number jump to about 170 million just by 2030, right? And in that, uh, how do we make sure that every child who's becoming an adult is automatically getting access to digital identity? So that's the first step. Digital identity is the gateway. Based on that, we need to start to understand what people's needs are. We need to start mapping what we call the customer life cycle. And in other parts of the world, I grew up in the West. I got a bank account when I was 16 years old. At 18, my bank already knew that I had a need to go to college, and they started offering me student loans. At 22, they already knew that I would have a need to upgrade my vehicle. So they started offering me auto loans or started pointing me to partnerships where I could get a loan that serves that need. Now, for us, marrying access to need is very important. And if we go back to our discussion about urban rural, we have an abundance of access in urban areas, but those needs have not yet been understood. It's not that financial services don't take place in the country. There are people borrowing to buy a motorbike today. There are people borrowing to buy a refrigerator or a TV or even clothes today. 60% of peri-urban merchants have some sort of a credit book going for 100 to 150 of their customers on a monthly basis. The merchant has become the lender of last resort instead of a bank. So over a period of time, what we have seen is, in Pakistan at least, that banks, in their desire to service the wealthy, service the urban, and service the well-to-do, have you know intermediated themselves by not really creating services which are need-based. So while we are seeing a growth in formalization of identity, while we are seeing growth of formalization of access to digital through smartphones, we still do not see a desire to understand people's true needs so that we can build products and services that they will use. We can mandate all the banks to be linked to Rast. How would you mandate usage, right? And for that, use cases are important. I'll take you back to another anecdote. When I was heading an international scheme in the country, we were in the running to implement real-time payments in Pakistan. Uh, in the end, we ended up withdrawing our bid uh, for certain reasons I'd not like to mention here. But even after not being in the running for that bid, my advice and direction to my team was to learn what the use cases were in real time payments in countries like Egypt and the UK, where real time payments have become a real success, and try to bring those use cases to Pakistan as long as they're relevant to people's needs, right? And while Rast had humble beginnings with P2P, with the introduction of P2M, there are several use cases that can be built. I tell my team that we should build a Rast first bank. And the reason for that is that I don't expect to make a lot of money from payments directly, but through payment related services, value addition to the business, helping people understand where they're spending their money, who they're paying, and how they're paying that person, how frequently are they paying that person or business. Those are things that people would be willing to pay for because it helps them streamline their lives and their businesses. So, as long as we can focus on use cases, Rust adoption would become easier. But if we continue to focus on just monetizing the payments aspect of it, I don't think we're going to go anywhere. And that's where both banks and fintechs are are not really putting their entire muscle to use to really understand what the power of real-time payments could truly be. So I don't think that I'm competing against digital payments. We have a common enemy, and that is cash. And any multi-rail play would always fight against the use of cash. I see real-time payments just as a complement to cards and card not present payments and QR payments, etc. I actually see Rast as the backbone to enable all of that. Right? There is no reason for us to attach a switch to Rast that can start taking. Actually, let's roll that back. There is no reason for us to not attach a switch to Rast and start taking card payments on the same rails. The capability is there. It's just about capacity. Wherever you have seen real-time payments take action, it has been a multi-rail approach, and they have attached multiple forms of payments to the same backbone, and that's where I eventually see this heading. Right? We expect that tourism will continue to increase in Pakistan. So when a tourist comes and they have their foreign cards, we're not going to discourage them from using them here, but rather than using them on one switch or the other, we could also attach a switch to Rast to take cross-border payments. We could create a remittance hub on Rast where every remittance that comes into the country formally lands on this hub and then gets distributed to whichever account, because every account will be linked to Rast. So when you start to provide the right kind of services, attaching payments to it at a later stage is easier because people see the value in paying for a service that adds convenience to their lives or adds some form of effectiveness to their lives. But if you sell or try to sell people on the idea of paying what would effectively be some sort of a discount rate uh, without showing them the value, that monetization discussion would die very quickly. As I said, let's think about what this means, these rails mean for us in the long term. If we can use it to digitize the cash that exists in the country, which is by some estimates, 66% of what the documented economy is, we expect that we would be effectively showcasing our wealth to the world, and we would be effectively showcasing the Pakistan opportunity to the world. A lot of the opportunity that exists is out of the formal sector at the moment. That's a tough one to answer, right? I do see a reduced reliance on cash. I do not see cash disappearing entirely, especially not in the next 10 years. Maybe in the next 50 years, I expect cash to disappear from the world entirely. But that also is very idealistic. In Pakistan, I see that there is going to be push on digital B2B payments. There is going to be push on digitization of taxation and formalization of taxation. That is going to contribute to people having to adopt. digital payments in their businesses. Consumers do not really, they don't really push digital payments. They have to be, that that effort has to be made by the government and by the merchants. Merchants are also a last mile. If you look at manufacturing, if you look at distribution, they also have to move away from cash. And if big companies decide that we are no longer going to deal in cash, small businesses that deal with those big companies would be forced to take on digital payments. And this would have a trickling effect. In our country, the largest payer remains the government, right? So we need to make sure that government is also digitizing the way they collect payments and the way they make payments.
And in the same way, I guess wage digitization is a huge opportunity as well, right?
Absolutely, absolutely, right? If you go to any industrial area between the 25th and the 5th of any month, you would find these long queues of people standing in line to pick up cash. When you Part of it may be related to taxation, I can't say for sure, but a lot of it is related to inertia, right? And I expect that an entity like ours would make an effort to partner with other entities who are operating in the wage digitization space to ensure that we're moving away from cash. Again, coming back to use cases, a laborer could uh, get their earnings in a wallet or an account, but when they go to a merchant, that merchant is only accepting cash. The interim stopover would be an ATM. Well, I must commend the folks who worked in that report. It was a very comprehensive effort. A few things that stood out for me was that while we continue to beat the drums on gender equality and gender equity, we have to make conscious efforts to include half of our population in the kind of products that we build and the kind of services that we create. Because while it may seem like men are running the world, that's not the case. Women are equally responsible, and women are equally participating in running the world. So the businesses that they're running and the shops that they're running uh, and the households that they're running, all of those require our attention when we talk about digitization of services and digitization of financial services, especially. So that was one of my key takeaways. The other key takeaway for me was that when large corporations and small startups come together to solve problems, they can move mountains. There were examples in there of a local fintech that is partnering with these large entities that are operating globally to solve real financial services problems. And that has shown initial success. That initial success needs to be studied and needs to be replicated. It's not it it should not be a secret or a competitive advantage. And that this is what that report does. It shares those best practices that are helping these pockets of success, uh, become prominent, and we just need to build momentum around that.